that all of these assets I've been talking about, the bubble assets, the stocks, the bonds, the property markets, they will implode relatively to gold in coming years.
Please join us for our next live stream, Sunday, August 23rd at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, August 23rd, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe, hit the bell to be notified on the updates, and give us a thumbs up if you like what we do. We really do appreciate your support. Egon von Greyerz is our guest today. Egon is the founder of Matterhorn Asset Management, a Swiss-based private investment company with a focus on wealth preservation. No stranger to the international gold community, Egon is a firm believer that gold is the ultimate form of wealth preservation. And we're happy to have him back here again as a return guest. It's time to saddle up and silver up for Egon von Greyerz. Egon, welcome back to SBTV. How are you doing?
Patrick, always good to speak to you. I'm fine. Luckily, I'm fine. Feeling good. Business is good. So can't complain, really.
You know, you wrote in one of your recent articles that when one of your daughters got married about 18 years ago or so, your bride's speech included a call to guests to buy gold. I'm curious to understand your motivation for including that in your speech. And did any of the guests express their thanks in the years after, given that there have been two gold bull markets?
You know what? I think the guests were curious too why I included it. But you know, I've seen where the world is going for quite a long time, and been worried about it. And my interest has always been analyzing risk and understanding risk. And to me, it was very clear that this was not going to end well. And this is why we really started looking at ways of protecting investors' assets and our own. We started really with our own and some of the investors we advised at the time. And we decided that gold was definitely the best way to do this, and that was physical gold and silver stored outside the banking system. So we built up a business or a system, not a business, a system for ourselves and a few bigger investors that we advised. And then 2002, actually, at the beginning of 2002, we decided now this is the time to go in. When gold in US dollars was $300, and the wedding you talked about was in the UK, so that was gold in pounds was £200, and now we know gold in dollars is 1930 today, and gold in pounds is almost 1500. So in pounds it's gone up 7.5 times, 1500 pounds. So the advice to the wedding guests was absolutely right. I felt strongly and passionately about it. Obviously they thought I was mad. I'm sure by including this in the speech for the father of the bride speech. But nevertheless, I did, and I doubt that anybody bought gold at that time, and I doubt anybody has bought gold since. And this is typical, Patrick, isn't it, for the whole investment market? That as we know, only 5% of world financial assets are invested in gold. Gold now, as we know, in this century has been the best performing asset of all assets for the last 20 years. So sadly, no, they were surprised, the wedding guests. They didn't listen, I'm sure. And now, obviously, a lot of these people who still don't understand it, they now believe that gold has gone up too much. People never believe that the stock market goes up too much, because it should always go up and up and up. That's inevitable in their view. Stocks can't go down, but the gold, of course, is a bubble, and they don't understand it.
First, I got to ask, just between us, was that speech before or after the drinks were handed out?
No, that was probably in the middle, Patrick. That was probably in the middle. The atmosphere was good, and obviously we'd had our before dinner drinks, and this was during the dinner. So I can't say that I or the guests at that point did not understand what I was saying, or that I didn't understand what I was saying either. This was planned, so that was actually, but of course, people don't come to a wedding reception or wedding breakfast, as it's called in the UK. They don't come to even if it's a dinner, it's called wedding breakfast. People don't come to that to get investment advice. I understand that. But anyway, I feel passionately about helping people, so I took the opportunity.
Yeah, well, we're glad you did. I'm sure a lot of people are glad you did as well. But Egon, despite the recent pullback, gold has been breaking record highs in recent weeks. Did you notice a change in people's attitudes towards gold?
Well, we are, as you are, I'm sure, our typical client is a wealth preservation client. He's not a typical investor, so he doesn't hold a portfolio of stocks and bonds and property and 5% of gold, which is, the ones who even think about gold. That's normally the maximum they will think about, and so therefore we have people who are worried about the world as clients, and they are. I mean, I would say that our average client certainly has at least 25% in gold, and many have a lot more of their total financial assets. Many have a lot more because that they believe that what I'm saying. I think the world is going to have massive problems, and that it's very hard to protect yourself against this, and that's why like you are doing or we are doing for bigger investors, holding metals outside the financial system. I mean, that's the safest way to protect your wealth today. There's no question about it. So yes, we saw a change in attitude from the point of view that our wealth preservation investors, more people came to us, and existing investors invested more. And obviously, we see the whole year has been a very strong year from our point of view, and it obviously accelerated in March, April, May, and it's still strong. So, and I expect this to continue. People, sadly, we're now, every day we're seeing, more economic problems in the world, more money printing promised, and so the trend is so clear. You have central banks that are indirectly totally supporting gold now by destroying the currencies, and debasing the value of all money.
I think it's safe to say we are seeing a gold bull market right now happening. In your opinion, how long do you think it'll last? And if you could pinpoint one place where this bull market started, where would that place be?
Well, the obvious place is our dear friend Tricky Dick, Richard Nixon. That's when it started. The 15th of August 1971. I mean, I published articles from and quoting Chinese official newspapers at the time, where they clearly said that this is the end of the financial system, the Western financial system, and this is the end of the dollar. They saw it then. Nobody else did. They saw it, and that's when gold was, as we know, $35 to the ounce, and already in the 70s it went from $35 to January 1980, $850. And then we had a long period of correction down to $250 in 1999. And of course, and we went in, as I said, for ourselves and a few investors in 2002. And now, so that we had a fantastic bull market in the 70s. Also, it was a period of high inflation, of course. Then we had a period when asset markets did very well, stock markets in the 80s and 90s up to 2000, and gold went all the way down, as I said, to $50. And now we're on the way back again. So the second phase of this started. The first phase was 71. The second phase was 99 or 2000, if you want, and when gold was around to $5,300, and that second phase, which is now gone from 250 to high 90 or over 2000, that is just the beginning. And remember, we're talking US dollars, but in all other currencies, we had already surpassed the 2011 high, which was in dollars 1920, but all other currencies had already gone past that. So to me, that 1920 high of 2011 was not an important target or resistance, because gold in all other currencies had already shown the way. So that's the second phase of this bull market started in 99. Then we had this quite long sideways move from 2011. It was longer than I expected. They did very well, governments, and holding down gold and printing money without having an effect on gold and silver. But eventually, I mean, with this gold level in dollars of 1350, which I called the Maginot Line, based on the French defense minister during the First World War, so who in the 1930s built this defense line against Germany. Very strong defense line, but that 6 year wait for us from that, where gold held under 1350 for 6 years between 13 and last year, June last year, it broke it. But that was, I forecast that it would break, and that was a very significant break. I would say that is the latest leg up of the gold market now. And that's now, what we're seeing now is nothing. 1900, 2000, that's nothing. We're going to see so much more, again, not because gold is going up, but because currencies are being destroyed.
You touched on the economy, so I'd like to ask you, how affected is Switzerland's economy right now by this global recession?
Well, Switzerland is an amazing country. I was born Swiss, and I am Swiss, but I was raised and educated in Sweden, so I also have a Swedish passport, and now, of course, I work and live partly in Switzerland. And it, is the best managed country economically that I know, and also politically, it's the best political system. I mean, Singapore is good also, but Switzerland is a very old, historically a very old democracy. Singapore is a new democracy, so Switzerland has managed extremely well during this period, and they're only expecting, if you take GDP, they're only expecting the whole year to end up minus 6%, for example. And unemployment is not more than something a bit over 3%. So although we've seen coronavirus in Switzerland in the beginning, it was quite severe, but the system coped with it, and a lot of people continued to work, or they obviously some people did get subsidies from the government. But overall, it hasn't affected the population or the economy in a major way. So I think Switzerland is coming out of this much better than most countries, because they're just very soundly managed.
That's good. Let's hope it continues. Egon, you touched on money. I mean, surely right now we're witnessing the destruction of the current currency system by all these years of greed, largesse, conjuring of fake money. Where is money going in perhaps the short months or years ahead, and what is money going to look like or evolve into?
That is a very good question. You could ask, what is money? Because now there's a misconception that the pieces of paper or the electronic entries on your bank account that is money. It bears no resemblance to what money should be, because money is what you get. When that was replacing, a service or production of goods, and that not and that's real money. And then it was replaced by silver or gold instead, rather than doing a service for someone and just paying them in food or whatever you could offer someone. And then it got into silver and gold instead as a medium of exchange. But now, money today, what people call money, has nothing to do with money. It's just worthless pieces of paper that central banks and commercial banks also, since issuing more credit is also a form of money printing. So that the banks, central banks and banks are just producing in any quantity they want and that the world needs. So it's a fallacy to call that money. It's a Ponzi scheme. It's fake money. It's money that has no value, and that's why this will end badly. You cannot produce hundreds of trillions of pieces of paper or electronic entries that you call money, because nothing has been produced or no services have been made against that money. So therefore, we start on an incredibly weak foundation here. And so what's going to happen next? Well, since this money is going to become worthless, as you know, I mean, we've already gone down. Since 71, all currencies are down 97 to 99% against gold, and since 2000, they're down 85% roughly against gold. So the trend is very clear: it's going to zero. They are going to zero all currencies, and central banks are not stupid; they're just half stupid, and governments, because they know what's happening, but they have no other solutions, because their government's primary purpose, from the way I look at it, is to buy votes, and buying votes is just printing money, because it's the only one. Once the economy can't produce a surplus, automatically by working and producing goods and services, but that you actually have to print money to achieve a surplus in the economy. Then of course you're on a slippery slope, and that's where we are now. And therefore, I say the central banks know what they're doing is not going to end well, but they still believe in MMT, modern money theory. And they still believe, Nobel Prize winners in economics, etc., still believe that printing money is solving the problem. Well, it ain't still solving the problem. I can tell you, it's not going to end well. So therefore, they will be seeing that soon, and they are planning, of course, alternative to the currencies now. So whether that will be some digital or crypto, or US dollar or euro, etc. I'm sure that's what they will have to do one day when the current money or dollars or euros collapse even more, and then they will try some hocus pocus to just make the old debt disappear, and now we're starting from scratch again. Of course, it's not going to work. You can't, if you make debt disappear, all the assets that this debt financed will also disappear, because you have two sides of every balance sheet. So if you actually eradicate one side, the other one will also disappear, and that's what we're going to see in my view.
Well, do you think the populace or the world is going to buy into moving from an unbacked fiat, which basically collapsed, and going into an unbacked digital or crypto?
Sadly, the masses don't understand this. They can only measure it in their own living standards, rather than if you know how the media work now and propaganda. I mean, it works extremely well, because there is not a single journalist now who does any analysis whatsoever, whether that's in the papers or on television. They just take what they're fed from, press releases from the government or from the Fed, and they just read that and republish it. So the whole standard of journalism is absolutely appalling. So therefore, people are never, and of course, people don't have the patience anymore. In the old days, they read the papers, and there were intelligent articles in the papers, and there was intelligent analysis on television. If you looked at television back 20, 30, 40, 50 years, when I was young, it was mainly programs where where they were discussing things rather than just showing game shows. And now it's all about game shows and music all day long, to entertain the masses and make them dumber. Sadly, I don't mean that in a nasty way, but that's part of the propaganda. Don't tell them, this is 1984. I mean, it was a brilliant book. It was written by George Orwell, written at the end of the 1940s. But I mean, for the people who haven't read it, read it, and for the people who have read it, reread it, because it's amazing how accurate the predictions were. So you're just more and more propaganda. You're dumbing down the people, and people are not going to understand. Only thing they understand is if their stomach is full, and if they have some kind of civilized life. The problem is that we get to a point when people will not be able to do that, or many people won't. And that's when we're going to have more social unrest and more problems.
Yeah, that's a good point. But, given the astronomical amounts of money printing that has happened in the last decade, why have we generally seen not high levels of inflation starting to roll in? Inflation defined by the Fed.
Yes, this is, of course, something new that the world has not encountered before, because we have a financial system which is bankrupt, and they have stretched the banks and the whole financial system have stretched their balance sheets in such a way that their books are full of bad debt. Of course, they don't recognize it, but I know and you know that most of this is never going to be repaid because it can't be. So it's just a question of deferring it. But in the end, that won't work either. So therefore, the money that has been printed is all, which we discussed before, it's not actually been invested in the economy. It's all gone to prop up the financial system, prop up the bank's balance sheets, to help companies, and now, as we said in Corona times, also to help some people survive. But it's nothing is going into the system, and therefore all we've seen is that the people who've been standing next to the till or to the money printing machine, they're getting the money. That's the banks and the big investors, and they're taking that money, investing it into financial assets, stock markets, bond markets, property markets, etc. And that's where the money has gone, and that's why we've had the most massive inflation in asset markets. Very unsound for the economy. And instead of actually having that going to the productive part of the economy, which it hasn't. But the velocity of money has been collapsing. The velocity of money means that that's the number of times that money which is printed is being used and spent. And that's down to an all-time low. So that proves what I said, that people are actually not getting the benefit of this, or the economy is not getting the benefit of this printed money. It's just being kept by the banks and then put into asset markets.
You think I know the Fed has been trying to get inflation for quite some time. You think when that inflation actually sets in, you think they'll be able to control it?
No, they won't be. So now they're it's just crazy. Now all central banks are trying to create X% inflation, 2% inflation, or whatever it is. But that, sound economies don't have any inflation, first of all. Sound economy, you don't need inflation. If you should have stable prices. That's a sound economy. So now they're trying to create inflation, but in spite of printing trillions and tens of trillions and hundreds of trillions, we're not getting any inflation because, as I said, the money is just going to save a bankrupt system rather than invest and produce things. And therefore, we're not seeing inflation. But I think, as I said, because now currencies are coming down rapidly as measured in gold terms, in real purchasing power terms, and I think we are going to see inflation now going up, and when we are going to see, therefore, that eventually, I think, leading to hyperinflation. There is a scenario also. The other side of this is that they fail the money printing can't keep up with, banks start collapsing, and it goes so fast that they're actually not being able to keep up printing money to save the banks. Then, of course, we get a deflationary implosion. That's not my number one scenario. I think we first get hyperinflation, because they're now on the ball printing all the time, and they know all the banks that are in trouble, because that's what they started in August, September last year, when they said, the central bank said that, we're going to print unlimited amounts of money. They didn't say why, but we knew that there are problems in the financial system. So that's how this, of course, latest crisis started. Coronavirus was just a catalyst. It was actually not the cause. The cause was already in the system, and the central banks indicated that clearly in August, September 2019. And now, as I said, and now they know, and they're watching all the banks all the time. So something has to happen that they have missed in order for the whole system to collapse overnight, let's say, or very quickly. And therefore, we get a deflationary collapse straight away when the banking system and the whole banking system collapses. That's not my preferred scenario. I don't prefer any of them. That's not the most likely scenario. I think first we will have hyperinflation, and then after that, when that fails, we will have a deflationary collapse also. It has to end in a deflationary collapse, because all the debt has to implode and the debt has to disappear, because until it's done that, the world cannot grow in a sound way. Plus the fact that in a deflationary implosion, there won't be a banking system for a while, so there won't be any normal money. So therefore, gold and silver will be money, and therefore they will be valuable in that situation too. In nominal terms, not as high as in hyperinflation, but still they'll be more valuable than anything else you could use. So therefore, that's a good thing. Gold and silver will actually protect you in both the inflationary and in the deflationary scenario. That's why people have to hold physical gold and silver.
Yeah, I completely agree. I think it's gold and silver probably the best investment / insurance vehicles that you can get into. Egon, what do you make of the EU Recovery Fund, which was announced a few weeks ago? Will it help, or is it another step in the wrong direction?
The EU, my view, if you take the bigger picture, my view of the EU is that it's an organization that will not survive. It started as a trade union, if you want, with EFTA and free trade zone, and then the politicians grabbed hold of it and made it into political union and a financial union. Doesn't work. This is not the United States of America, where a few pioneers came over and created a new country. This is an area where you have now 27 countries now that all have different history, different financial systems, and different growth rates and different inflation rates, etc. You can't compare Croatia or southern Italy with Germany, for example. So now you've had created one currency that for everybody. That doesn't work, of course. You can't have Germany has benefited dramatically from the strong from a weak euro, and their export industry has thrived on this, because they are very efficient also, and they can keep inflation down in Germany. Whilst Italy they have suffered dramatically, and the Italian economy is so bad, and people are suffering there because the euro is too strong for them. They can't export anything, and also they're not as efficient as Germany. So Italy is a wonderful country. I love it, but the Italians are suffering now badly, and the people don't hear about it. So that's what I'm saying is European Union doesn't work. It's not going to work with the new recovery fund, which is 500 million euros, which is going to be printed as grants over the next 4 years, I think it is. But the countries to get this, they have to perform, and they have certain criteria, and a lot of this 500 billion that was issued is already existed before, and I think a lot of it will never happen actually. And then you have another 250 billion in loans. With then it's going to be relatively cheap loans. But you know, I've lived part of my life in the UK, and I think the UK did absolutely right to pull out of the EU, uh, because you can't have a union where unelected and unaccountable um, um, bureaucrats or politicians sit and decide of the whole over the whole region from Brussels. That just doesn't work. And therefore, and the way the Eurocrats or Brussels wants it, they want to have all the control in the end. So that's why I'm sadly pessimistic about the EU. I wish it would continue as a free trade zone with close cooperation, because if that doesn't happen, if it doesn't again go back to that, then there'll be tension again between lots of countries, not just the UK. There'll be Italy, there'll be Greece, there'll be Spain, because they won't be able to cope with all the conditions that they're being asked to actually fulfill in order to get this money. They should forget about it. They should get out of the union, get out of the euro, and create their own currencies, in my view. So I am pessimistic about the EU. These grandiose organizations, international organizations, they only work in good times. In bad times, they were never meant for bad times, because then it's everyone to himself. And no, they don't. They only cooperate in good times, not in bad times. And also, all the rules are only for the little countries. Germany and France, they don't have to follow the rules if they have deficits or need to borrow money or whatever. They can do it, but the little countries can't do it. So it's an unfair system, and the sooner it evolves into something different, the better, in my view, because it's not the euro is not going to last, and the union as it is not going to last, sadly.
Let's say for new guys out there, for new viewers, what is so special about gold that even though it is a lifeless metal, man has always sought the help of gold throughout history to stabilize economies and to establish and maintain trust?
Yeah, well, you can take Warren Buffett's definition of gold, that you spend a lot of time and money and effort to dig it out of the ground, and once you dug it out of the ground, you put it back in the ground again in vaults, etc. Well, that's only happening because the world economy and most economies in the world are being so badly managed. Gold. We know what gold represents. Gold throughout history has been money. And it's not just money, it's the only money that has survived, and the only money that has maintained constant purchasing power. So every time you've had a gold standard, a gold backing, the economy has been in good shape. But the problem is, this happened time and time again, the fact that they are cheating with the system. And when, you take the Romans, for example, who it was around 200 AD, that they actually also, their economy was obviously overstretched because they expanded into the whole world and taken over, a massive empire, and they were suffering in the same way Rome as the world is suffering now, i.e. massive debt, and the production falling, etc. So the Romans then started to, the denarius had 100% gold, silver almost in 190 AD, and 100 years later, it had zero silver content, and that was their way. It was copper or zinc instead. So that was their way of debasing the currency. So this has happened time and time again in history. As soon as governments can't satisfy the will of the people anymore by running a sound economy, they revert to printing, and so the Romans did it in their way. Well, we've seen it, many examples in history. When it's happened, and it's happening now again, and that's why gold is so important. And now, because we are producing worthless money hand over fist, now it's incredibly important. I mean, I think now that it's the most important investment and also the most important asset to hold for wealth preservation purposes. Our primary aim, and for our clients, which we have around the world, it's is wealth preservation. That's number one. We're not worried about gold going up or down, because we know the trend is very clear because what's happening in the economy, as I've just outlined. So therefore, you know that if goes relatively, gold will increase in value. But that's not right now. We are worried about wealth preservation. Actually, that all of these assets I've been talking about, the bubble assets, the stocks, the bonds, the property markets, they will implode relatively to gold in coming years, and therefore people will lose a major part of their wealth. And this is why gold now is more important, certainly than any time in modern history.
Yeah, I completely agree with all of that. But let's say we have silver, we have gold. What is the exit strategy? I mean, when people ask you or your clients ask you about an exit strategy, what do you typically tell them?
It's very simple, Patrick. That right now nobody has to think about exit strategy, because they are just going to think about like our clients. No, we've never. Our clients during the whole of the time. I mean, we have said we started as a private company with gold in 2002, and then we opened it up to outside investors in 2005, 6. And our clients, we have virtually no sellers because they are wealth preservation clients. And I think that's the right strategy. And now also, I don't see any reason to think about exit for many years. Now, we obviously, part of what we do and part of the what we do for clients is advising them on how we see the world. But I think if you sell if you had a good run up now to 2,000 or to 3,000 or 4,000, people think about I must take profit. It's not a question of taking profit. There's no profit to worry about here. This is wealth preservation. You're not going to get out of that asset until you have something better to put it into. And, in my view, you're not going to put it into the bank or to the financial system until that has been restructured, i.e. until the debt has been, disappeared or wiped off or imploded, as I call it. And not until stock markets have gone down maybe 90 or 95% measured in gold. The same with property and bond markets. My bond market is the biggest bubble in the world, and that's going to totally crash. So therefore, you shouldn't even think about exiting your gold or your silver until that happens. So there's no question of taking short-term profits here because it's gone up. Because you should not trade physical gold and silver. You're going to get slaughtered. Sure, if you do need some of it to live, you sell a little bit just for living, but overall, if you can, keep it. And it's just a question of holding on, because nothing has changed and nothing will change for many years for you to get rid of your gold and your silver, in my view.
Egon von Greyerz, before we wrap up, can you share with us more about Gold Switzerland, which is the precious metals division of Matterhorn Asset Management? And how can we follow your work?
Patrick, so we have a website called goldswitzerland.com, and there we talk about how we help wealth preservation investors to buy physical gold, hold it outside the banking system, and silver. As I said, we have a mountain vault, which is the biggest gold vault in the world, in the Swiss Alps, and the safest gold vault in the world also. It's like a James Bond type of security. That's for investors over 5 million. So that's for very big investors. And then on the website, I write normally weekly articles, and then I do interviews with people like yourself, which, it's always very good to talk to people who understand the markets like you, Patrick. So I do that regularly. And as I said, our passion is really to help people preserve wealth. We have never knocked on any door ever. We never tried to convince people to buy or store gold. People come to us, and for us, it's really a passion to help the people because I think it's, as we have discussed, very, very important to do this because of the times I see. So that's what we do. Very, very simple business, and we're a high service business. We hold people's hands, we advise them, etc. Our minimum is actually $400,000. So as I said, we start at a high level. But for investors who are smaller, I mean, there are many good companies, including your company, of course. So everybody can buy gold. It's just a question of which channel they use. But people want to come to us, goldswitzerland.com is our website.
Okay, Egon von Greyerz, we thank you for your time, and we wish you all the best.
Patrick, always a pleasure to talk to you. You're doing a lot for the industry, and you are producing some very good interviews. So thank you very much. I enjoyed the discussion.
Thank you also, Egon, and we think you're doing some great work as well. So hopefully we'll be in touch and we can do this again soon.
I hope so. I look forward to it every time, Patrick. Thank you.
All right. Thank you, Egon. That was Egon von Greyerz from Matterhorn Asset Management, sharing his views on the precious metals market and the global economy. To find out more about Egon's work, please visit his website, goldswitzerland.com. If you like this video, please hit the like button and do subscribe to the SBTV channel and check out our podcast on iTunes and Spotify.